Connect. Tap it. Send it. Pay it. Scan it. Save it.
Today, we're comparing two financing options from Hong Leong Bank. Firstly, housing loan, a conventional loan tied to the base lending rate (BLR), offering flexibility and competitive rate but with compounding late payment penalties. Second, housing financing I, a Sharia compliance option using the Islamic base rate, featuring ethical financing, non-compounding penalties, and waivers for specific situations. Both share similar loan tenure and eligibility requires, but early settlement term differ. In short, the housing loan suits those seeking flexibility, while the house financing I is ideal for ethical Sharia compliance financing.
Owning a home is a big milestone, and Hong Leong Bank offers two housing financing options to suit different needs. First, Hong Leong Housing Loan, a conventional financing product based on interest-bearing loan, which is competitive interest rate, flexible loan tenures, value-add options such as extra repayment and fund withdrawal capabilities, ideal for customers seeking straightforward financing aligned with traditional banking practice. Second, Hong Leong Housing Financing Islamic, a Sharia compliance solution adhering to Islamic banking principle, which is operate on mudharabah concept, avoid riba, gharar, and maisir, appeal to customer prioritizing ethical and faith-based financial solution. Why choose Hong Leong Bank? Hong Leong Bank ensure affordability through competitive rate and flexible terms, and alignment with value for customer with religious or ethical preference.
Next, for methodology, this case study compares Leong Berhad's housing loan and home financing, highlighting their significance in Malaysia's financial market and their appeal to diverse consumer needs. The analysis emphasized the structural and functional difference between conventional loans and Sharia compliance financing. Data collection utilized official sources like Hong Leong Berhad's website for detailed product information on interest rates, tenors, eligibility, and fees. Financial comparison platforms such as iMoney and CompareHero provided broader market insight, while customer reviews on platforms like Google Reviews and social media offered real-world borrower experience, including transparency, ease of application, and hidden costs. The comparison focused on key factors such as interest and profit rates, contrasting fixed and floating rates in housing loans with the profit structure of home financing. It also examined fees, including processing charges and penalties, to assess affordability alongside additional features like insurance coverage, cashback, and rewards. Finally, loan duration, eligibility, and repayment flexibility were analyzed to determine suitability for specific consumer profiles, such as first-time buyers or low-income earners. This comprehensive approach offers valuable insight to help consumers make informed decisions about mortgage products.
For the product description, we have two products here, which is HL Housing Loan and HL House Financing I. HL, which means Hong Leong Housing Loan, is a home loan provided by Hong Leong Berhad, and it is based on term loan contract. So the key feature for this housing loan is firstly competitive loan package. Secondly is extra margin for MDTA financing. What is MDTA? MDTA is insurance attached to the loan, and of course with additional cost. So the third one is flexible installment. Borrower can make any amount of payment at any time. The second product is HL House Financing I. It is Islamic property financing product offered by Hong Leong Islamic Bank Berhad using murabahah via tawarruk arrangement concept. So the key feature for this product is flexibility in making payment and save more and on profit rate. And secondly is MRTT or MLTT at additional cost. What is these two? These two is takaful, attached to the loan in case of total permanent disability by the borrower. Thirdly is peace of mind through fixed ceiling rate. And fourthly is rebates. Rebates are given on some things such as early settlement. Another two feature also applied to the housing loan, which is many payment alternative, which means that borrower can pay their loan or financing through internet banking or auto deduct from their account. And secondly is hassle-free application, which means that both products can be applied by any applicant through their website.
Let's begin with an overview of the interest rate for both products. The Hong Leong housing loan operates on a conventional floating interest rate linked to the base rate, which is currently set at 2.72%. The effective rate starts from 4.75% per annum, depending on a factors like the loan amount, tenor, and customer profile. On the other hand, the Hong Leong Home Financial Eye follows a Sharia compliance profit rate, also starting from 4.6% per annum. Both rates are subject to change in market condition, making it important for borrowers to monitor rate adjustment over time. Next, let's compare some key features of the two products. For both, the lock-in period is 3 years, and refinancing or early settlement during this period incurs as a penalty of 3%. However, discount may be offered during special promotion or for the high-value loan. The major distinction lies in the structure of late payment penalties. The housing loan applies compounding penalties, while the home financing eye adherence to Islamic principle by enforcing non-compounding penalties. In the terms of unique features, the housing loan provides flexibility catering to the customers seeking competitive rate. Conversely, the home financing eye is ideal for those prioritizing ethical and Sharia compliance financing. Additionally, the home financing eye offers waivers under specific circumstances which can benefit certain borrower profiles. The differentiation align with the diverse need of customer and their financing preference.
Fees and charges for housing loan, we have setup fee of 200 ringgit and monthly fee of 10 ringgit, while Hong Leong Financing did not have this fee, but it has trading agency fee, which means wakalah fee, but it is waived by Hong Leong Bank. And thirdly is security document retrieval fee, which is 2 ringgit per page, minimum are 10 ringgit, but for house financing maximum charge 60 ringgit. The other fee is additional loan statement fee. Firstly, for up to 1 year, 10 ringgit per request, 2 ringgit per page. And secondly, more than 1 year of statement is 10 ringgit per request, but 5 ringgit per page. But for house financing, we did not have such kind of fee. Early settlement charges for housing loan, of course, is subject to term and condition during agreement. But generally, if borrower settle the loan within certain time period, these are the term and condition. Firstly, settle within 3 years, 3% of 90% loan limit will be applied. The secondly is settle more than 3 years but less than 5 years, 3% of 80% of loan limit will be applied. For house financing actual costs incurred by the bank are charged with maximum of 2% of the financing amount. And the example of costs are firstly the cost of financing contract with discounted rate during lock-in period. Second is cost reflected by reduction in rebates initially received by the customer. Termination fee and cancellation for loan prior to loan disbursement is same for both product, which is 2,000 ringgit. Late payment charges for house loan is 1% on the amount arrears, and for house financing is 1% of the overdue installment amount. Processing fee for house loan is waived, while for house financing is not applicable. That is the difference between the two products. So the rest of the fee and charges are same for both product, which is for stamp duty is as per Stamp Duty Act in 1949, revised in 1989. Legal fee is as per scale of solicitor's remuneration order. Disbursement fee is as charged by respective authorities or legal firm. And letter of confirmation for EPF withdrawal is 20 ringgit per account and per request. Valuation fee is as per 7th schedule of the scale fee set by the Board of Valuer, Appraiser and Estate Agent Malaysia. Miscellaneous fee including IBG payment, IBGVR, ATM payment, check processing fee and other fee or charges may be imposed respectively according to the transaction. And paper settlement fee is 2 ringgit per statement. And lastly is withdrawal of advance fee is RM50 ringgit per request per withdrawal.
I will be comparing two housing loan options from Hong Leong, the Hong Leong housing loan and the Hong Leong house financing We will explore the benefits, eligibility criteria and the key feature. Basic concept. The Hong Leong housing loan is a conventional loan with interest, where borrower pay interest on the loan amount over time. In contrast, The Hong Leong House Financing I is based on Sharia principle, utilizing either murabaha or ijara as a method of financing. This ensures the absence of interest, adhering to Islamic finance law. Eligibility: both loans products have the same eligibility requirements. Malaysian citizens with a stable income and a good credit history can apply for either of these loans. The key difference is that the house financing I complies with Sharia law, making it an ideal choice for those seeking Sharia compliant financing. Repayment tenure: both the housing loan and the house financing I offer the same repayment tenure, which is up to 35 years or until the borrower reaches the age of 70, whichever comes first. So there is no difference in this aspect between the two options. Reward and cashback: for early repayment, the housing loan offers cashback, which can be a good incentive for those who repay their loan early. Meanwhile, the house financing I provides a discount on the profit rate for early repayments, offering a slightly different form of reward. Insurance coverage: both products come with insurance coverage, but the type differ. The housing loan is covered by the Mortgage Reducing Term Insurance (MRTA), while the house financing I offer either MLTT Takaful, Mortgage Level Term Takaful, or MRTT, which are more aligned with Islamic insurance principle. Advantages: one of the main advantages of the housing loan is the flexibility in choosing interest rate, which can cater to different borrower preferences. The house financing I, on the other hand, offer the advantage of being Sharia compliant, with no interest or uncertainty elements, making it suitable for those who want to ensure their financing adhere to Islamic value. Now, let's take a closer look at the comparative analysis of benefit between the Hong Leong Housing Loan and the Hong Leong House Financing I. We will compare the key benefit in categories such as a reward, insurance coverage, cost saving, and additional benefit. Reward: the Hong Leong Housing Loan offers cashback for early repayment, which allow customers to reduce their loan burden more quickly. On the other hand, Hong Leong House Financing I provide a discount on profit rate for early settlement. Additionally, hibah may be created as a reward for customers who settle early, aligning with the principle of Islamic finance. Cashback opportunities: with the Hong Leong Housing Loan, there are some packages that offer partial cashback on overpayment or refinancing option, giving customer flexibility in managing their loan. In contrast, the Hong Leong House Financing I does not offer direct cashback but allows potential cost saving through lower profit rate on overpayment. Insurance coverage: both products offer insurance coverage, but they differ in their approach. The Hong Leong Housing Loan provide MRTA, Mortgage Reducing Term Insurance, which cover the outstanding loan balance in case of death or disability. Meanwhile, Hong Leong House Financing I offer MLTT Takaful, Mortgage Level Term Takaful, ensuring Sharia compliance with similar coverage. Cost savings: flexible repayment structure in the Hong Leong Housing Loan may lead to the lower interest over time if prepayments are made. On the other hand, Hong Leong House Financing I offer the cost saving through the early settlement and a profit sharing principle, reducing the overall financing cost for customer. Additional benefits: the Hong Leong Housing Loan gives a customer the option to refinance at the competitive rates and is more established in the conventional market. The Hong Leong House Financing I, however, aligns with the ethical banking principle and may offer rebate IBRA upon early settlement, which could be appealing to the customer looking for a Sharia-compliant solution.
Hong Leong Bank offers two types of home financing, which is the Hong Leong Housing Loan and the Hong Leong House Financing Islamic. Loan amount for both options provide financing for up to 90% of the property's price or market value. For the rate, the housing loan use an interest rate based on the base rate, while the house financing Islamic applies a profit rate under Sharia principle like mudarabah or ijarah. For the tenor, both options offer loan periods from 5 to 35 years old or until the borrower turns 70 years old. Repayment, monthly installment can be fixed or variable for both, but the house financing Islamic include both principal and profit. For the prepayments, with the housing loan, prepayment is allowed but may involve penalties. For the house financing Islamic, prepayment is penalty-free under certain conditions. Payment charges. Both options charge 1% per annum on overdue amount, with the house financing Islamic being Sharia compliant. For the housing loan, processing fee, early settlement charges, and other fees may apply. If cancelled before disbursement, there are 2,000 cancellation fee. For the eligibility, for the housing loan, applicants must be 18 years old or older, with the loan matured by 70 years old. Malaysia or resident can apply, and co-applicants like immediate family members are allowed. For the house financing Islamic, applicants must be 18 years old to 60 years old. Malaysian or resident are eligible, with immediate family members allowed as a co-applicant.
Firstly, high-income consumers, conventional housing loans, pros competitive interest rate package, promotional rates for high-value loans, and flexibility in payment terms. Cons, susceptibility to interest rate fluctuations. Target audience, high-income earners who value flexibility, market-driven benefits, and possibly lower long-term costs with floating rates. For Islamic home financing, pros, stability through fixed profit rates, transparency, no compounding interest, and adherence to ethical financing principles. Cons, fixed rates might appear less competitive if market interest rates decline. Target audience, high-income individuals who value predictability, stability, and Sharia compliance.
Second, student or low-income consumer. For conventional housing loan, typically conventional loan have strict income requirements and higher yearly repayment penalties. This can be a challenge for low-income groups or students with limited financial stability. For Islamic home financing, may offer lower entry barriers with more inclusive eligibility criteria such as lower income requirements. Sharia compliant financing avoids compounding penalties, making it more forgiving in case of financial difficulties. So, Islamic home financing is in general more accessible for student or low income groups due to lower upfront fees, ethical practices, and flexibility in handling defaults. Lastly, frequent travelers. For conventional housing loan, many banks bundle housing loans with rewards programs tied to their credit cards. For instance, Leong Berhad may offer travel perks like air miles or discount on flight for high-value loan customer. For Islamic home financing, while travel-related benefits are less common, some banks provide Sharia compliant travel package or partnership with Hajj and Umrah service providers. This benefit caters specifically for frequent travelers who prioritizing religious compliance. So, frequent travelers who are not bound by Sharia preference may find conventional housing loan more appealing due to greater travel-related rewards. However, for those prioritizing Sharia compliance, home financing is the better option.
In conclusion, let's review two housing financing options offered by Hong Leong: the Hong Leong Housing Loan and the Hong Leong House Financing Act. By comparing these two options, we can highlight the main difference and factor that potential consumer should consider when selecting the most suitable financing plan. First, let's discuss the interest versus profit structure. The Hong Leong Housing Loan is a conventional financial product that operates on the interest-based system. This may appeal to consumers who are accustomed to traditional loans and prefer predictable payments over time. In contrast, the Hong Leong House Financing Act is an Islamic financial product structured according to the Sharia law principle. Rather than a charging interest, it uses a profit-sharing model, making it an ideal option for consumers who prioritize ethical financial practice. Next, let's look at the Sharia compliance. For Muslim consumers, the House Financing Act offers a clear advantage as it ensures compliance with Sharia law, avoiding the concept of riba interest. This makes it an attractive choice for those who wish to steer clear of conventional interest-based loan and prefer an ethical approach to financing. Finally, while both products offer a variety of repayment plans, the House Financing Act might stand out in terms of flexibility. It often provides more options for early settlement without incurring additional penalty, which can make it a more appealing choice for some consumers who seek a greater freedom with their financial commitment. Recommendation. In conclusion, the decision between conventional housing loan and Islamic house financing act depends on the consumer financial priorities and lifestyle preference. For high-income earners, conventional housing loans are ideal due to their competitive interest rate, floating rate flexibility, and customizable repayment term. These features align with their financial goal and provide more control over loan repayment. However, if this individual prioritizes stability and ethical financing, Islamic House Financing Act offers a suitable alternative with fixed profit rate, transparency, and compliance with Sharia principles for long-term financial planning. For student and low-income consumers, accessibility and affordability are crucial. Islamic House Financing Act is a more attractive with lower income requirements, no compounding penalty for missed payments, and a more forgiving approach to financial difficulties. This makes it a more inclusive and manageable solution for individuals with limited financial stability. Frequent travelers may find conventional housing loans appealing due to additional lifestyle perks like air miles, flight discounts, and hotel stay. These rewards are particularly valuable for those who travel frequently. However, if these travelers prioritize Sharia compliance financing, Islamic House Financing Act provides ethical travel-related benefits and solutions that align with their principles.